And welcome to this daily market commentary for the 31st of January 2020. The end of the month is upon us. And what a month it has been. It started with the spat between the US and Iran, leading to the accidental shooting down of a Ukrainian airliner. Now, despite this, many equity markets continued their march to record highs. Phase one of the US-Chinese trade deal was officially signed as President Trump's impeachment trial began. And then came the coronavirus, an unexpected development that would set world markets on edge. And finally, today we have Brexit. Remember Brexit? Friday, the 31st of January 2020, finally sees the UK leave the EU after more than 3.5 years of arguments and deliberation. And we never thought it would happen. As you can tell from yesterday's commentary, which was tinged with a healthy dose of English sarcasm, I struggled to come to terms with the late day moves in equities and FX. The WHO declares the coronavirus a global public health emergency, and suddenly it's a risk-on event. All because the WHO chairman offered a couple of calming words. It was akin to the captain of the Titanic yelling, "Don't panic, it's going to be okay." I'll save you from the blow-by-blow rundown today, but today saw the fallout from Thursday's late-day price action. Add in a horrendous Chicago PMI number, 42.9 against 48.8 expected, and it was a full-on meltdown. The DAX and FTSE 100 both closed lower by 1.3%. The Dow Jones would dive by over 2% or 603 points. The S&P and Nasdaq fared only marginally better. Gold would rally to 1589 from 1571. And for FX, it was a classic risk-off scenario, with dollar yen dropping from 109.10 to 108.31. Euro dollar would go the other way, running from 110.16 to 110.95. Well, sterling would follow a similar path, heading to a high of 132.09 from a 130.81 low. Aussie, Kiwi, and Canada would all weaken. If Thursday made no sense, you really could have written the script and made a movie about Friday's moves before they happened. The big question from here is what happens next. Will the spread of the coronavirus be contained, and how many new cases will pop up around the world? It's going to be a very uncertain and interesting week ahead. For those of you that paid attention to my Euro-Yen chart from Thursday, you may well be surprised to hear we didn't break the parallel channel I highlighted. In fact, it would be the top side of that channel that was touched rather than the downside, which you might have expected under a risk-off scenario. So why was that? Well, euro-dollar strength was really the key, as we broke previously highlighted key levels as traders rushed to cover shorts. This was probably more a reaction to the terrible PMI number than the coronavirus. So let's quickly revisit the hourly euro-dollar chart I posted last week. As you can see, resistance at 110.40 over here broke like a knife through butter, and as did the next band of resistance at 110.65.70. You can see a very sharp move up here on the hourlies up to high around 110.95. As you can see, we have a couple of recent highs ahead of us here, 111.08, 111.18. Pullbacks theoretically should be limited. Previous resistance will now become support. But just keep in mind, we did come a long way fairly quickly on Friday, so you may see a little bit of profit taking to start the week. The medium-term support, which is right at the bottom of the chart down here, 109.80, which stretches back over here somewhere, which is really the major support level. Never really got tested. So a very interesting end to the week and the month, and I hope everyone survived okay. I look forward to speaking with you next week. Cheers.